Hey everyone, and thanks for jumping back into the cryptoverse. We are doing our weekly DCA live. We have James from Invest Answers over in the top left, and Rob from Digital Asset News on the bottom part of the screen. So what we're going to do is, like usual, we're just going to go through about 5 different questions, and at the end we'll actually field some requests from some of you guys. But the general idea is just to give an update on the markets, kind of talk about how things currently look. Obviously, markets are changing all the time, and with the most recent GDP contraction again, and by some definitions a recession, maybe not by the ever-changing U.S. definition. So we'll talk about that. We'll also want to talk about Bitcoin. Obviously, there's a lot of talk, where is Bitcoin headed here in the short term? Is 17.5, how significant of a level is that? Has it bottomed? Has it not? We'll also talk about the Ether Bitcoin valuation. Obviously, Ether has been outperforming Bitcoin recently, as well as a lot of other cryptocurrencies as well, not just Bitcoin. It seems like Ethereum has been leading the charge for a few weeks, so we'll talk about that. And then we'll also talk about kind of like what the expectations are going into the next meeting with the Fed all the way out in September, because it's quite a long ways off. We have to wait a couple months really before we get the next one. So we're going to talk about that as well. But anyways, it's a pleasure to have you guys here. Let's just go ahead and jump in, because we have a lot of questions. And James, I'm going to go to you first on this. Okay, so inflation is basically the talk of the markets for the last year or something like that, right? I mean, we kind of all remember when it flashed at a really high percent, like 6-7% back in late 2021, and the market risk assets started tumbling down. Now the question is, last month we saw that inflation year over year hit 9.1%. Okay, so it's pretty high up there. Do you think that's the peak for inflation year over year, or do you think there's a little bit more pain to come and it'll actually trend higher as we get later in the year?
Well, as far as I'm concerned, I think we are beyond peak inflation. The only nagging thing is the owner's rent equivalent, which is a very lagging indicator. But prices rose about 2.1% in the March quarter. I think about 1.8% in the June quarter. So, and it's probably going to get down to maybe 1.6, 1.7% in September. So things are definitely coming down, and annual rates are simply affected by the base effect. And inflation, in my opinion, certainly has peaked. Prices are looking to fall from here. And also you've got other factors as well, like Walmart and Target sitting on huge inventories. They're all cutting prices to shake bloated inventories. So that will also bring down prices a little bit too. There is a couple of little small issues that nag at me. One is oil creep back above $100, and the commodity index peaking up too. You probably noticed that as well. And another big red flag is the Biden administration says inflation has probably peaked. So they've clearly illustrated lately they're absolutely clueless. So that could be a contrarian indicator. If they think it's past, that means I could be wrong, because I don't want to agree with the Biden administration. And not getting political, it's just their record hasn't been very good. But final thought as well is the bond market has priced it in, and the bond market knows best, and they've priced in peak inflation. So that's my little quick and dirty summary of where I think we stand.
Okay, so you basically think that it's likely behind us, but also, do you want to agree with that administration is kind of where you're struggling a little bit? But yeah, I get what you're saying. Yeah, like the inflation is transitory, or we're not in a recession, or whatever it might be.
Whatever it may be.
Rob, what are you thinking about inflation? I mean, I remember back to March, a lot of people thought the peak was in then. And because we actually came back down a little bit, I think in April, I believe we actually saw it come back down for a month, and then it just went back up higher. Do you think it's that? I mean, I know that some things like some food prices like wheat and corn, I think they've come down. Oil's come down a little bit, but there's some other things that haven't yet. Do you think inflation has peaked, or you think it still has a ways to go?
I mean, I hope so. I mean, for what we have, but just like you said, I mean, we thought it had peaked a while ago, and we figured out, oh no, it really didn't. And then if you take a look at like my favorite website, Trueflation, where they take a lot of these different data points and pull them all in, you can see that I mean, it has come down over the last couple of weeks or so from, I mean, they had their high around 11.28, I think it was, 11.35. And then it had come down, but then it went down to like 9.2. Now we're back up at 9.68. And then another thing is that's just USA. And if we take a look at, they just added in their data points for the UK. And I mean, their inflation rate is at 13.8% and going up. So I don't know what's going to happen there, but I mean, one of the saving graces, and James mentioned it, was oil prices. But the reason that the oil prices went down, it wasn't because of anything any administration did. It was just because the demand went down because there was another lockdown in China. So people thought, well, maybe we're not going to use as much oil now from this enormous country, and the price dropped. But that wasn't really the case. Now that everything's open again, now the price goes up, which I still find odd that I think it was Chevron came out and had profits of like $11 billion when everything was going on, but that's another discussion. But do I think rates have peaked?
Or inflation?
I mean, I hope so. I hope so, but I don't. Every time I say, yeah, that's what it is, then it does the exact opposite. But if I had to say it, I would just say that I hope we're just going to go flat for a while, and then with this 75 basis points, it gets things a little under control. But who knows?
Right. Well, I think another thing too is, when we kind of hear Powell talk about it, even if inflation has peaked, like if it doesn't start coming back down, then they still need to see that clear path right back to 2%, or so they say, right? Like if it peaks is one thing. What if it just hangs out at 9%? That's something else we might have to consider too.
Yeah.
But yeah, but going into that, I mean, it kind of brings up the next question. I mean, like the most recent meeting for the Fed, they hiked by 75 basis points. This was generally what the expectation was. And some people thought it might be 100. Some other people thought it might be less, but it ended up being 75 basis points. Which, I mean, by the way, if you look at interest rates, this is basically the most aggressive they've ever been in terms of like how quickly they're raising it. I mean, it's just going like straight up, basically. Do you think that in September they will slow down? I mean, I think let me elaborate a little bit, because we know that Powell said that by the end of the year, I think their target is somewhere around like 3 to 3.5%, something like that. Like 3.5% is kind of what they said. We're already at around 2.5%. So if there's only 3 more meetings before the end of the year, and in total they're talking about doing just 100 basis points more, then you're talking about maybe 150 basis point and then 225 basis point hikes, which I do imagine is some part of the reason why risk assets are rallying right now, because we're going to have to worry about the Fed for a little while. We'll see what inflation does. What do you guys think for September? You think they're going to cool off with the Rob? I'll go to you first on this one. You think they're going to cool off with the hikes? You think it'll be 75 again, or maybe it's just depending on what the CPI print's going to be? What do you think?
I think it's all what their plans are, what they really want to do. Like, are they okay with having inflation consistent and just running it out like you just talked about? Then if that's the case, then they're going to cool off, especially with the midterms coming up for elections here the first week of November. So if the Fed crashes the market, that looks very bad for Biden and his administration. Not to get political, but it's just the truth. And that's why they've been talking about how recession really isn't a recession, and they give their data points for that. So really it comes down to what does Jerome want to do? What does the Fed want to do? Are they okay with elevated interest? Or they say, you know what, we want to crush it now, and then that's my legacy and go forward. I think, this is just a guess, is that they're going to take their foot off the gas a little bit and go, well, 75 basis points aren't so bad. We'll take a look at the CPI numbers. And they did say they were going to be data dependent. But the question is which data points they're actually going to look at, because it seems like they can do whatever they want to. So if they're okay with that, then they'll probably just go, 50 basis points and then just write it all out till next year after midterms, and then we'll see what happens. Who knows? They might even turn the money printer back on. So again, just what they want to do, and it's all connected with politics, I think.
Right. James, you kind of agree with that? You think they're going to take their foot off the gas pedal here with these interest rates, and I mean, not necessarily completely pivot. I mean, still raising rates, but at least like a glimmer of hope for sort of the more bullish macro views.
Well, before I jump in there, just to jump on 2 things that Rob said, turning the money printer back on, they have 2 bills now. One, I think, is approved. The other one's probably going to be signed. Sounds like the Democrats are trying to shoehorn in a lot of spending before they lose power in November. One is worth 250 billion. The other one's worth 750 billion. That's $1 trillion combined. So these money printers, QE to infinity, that's just going to continue. That's what we've been saying all along. Back to the question, the Fed funds rate is now at 2.5%. At 3.25%, that's 75 basis points from here. That's when the credit markets break. It's that simple. And I've been talking about this for over 2 months now. We are 75 basis points from financial Armageddon. And so the question is, I've been talking about the Fed being boxed in, multiple videos on it. They are boxed in. They know it. And they're listening to Jerome Powell. He said, I think his words were, it may be appropriate to slow the rate of increases, which is code for, yeah, we know we're boxed in. We're shooting ourselves in the foot every time we jack. So we can't. Now, the bond market, as I mentioned before, has priced it in too. And anybody can see that. So next step in September, he said he'd wait to see the data. He knows we're in a recession. Everybody knows that for months now, at least a quarter. And his rhetoric and words definitely feels like they're bowing down to inflation dynamics. They still talk about 2%, but really they know they have no control over inflation. They have control over demand destruction. And I think they can only do maximum 75 basis points more. It might be max a 50 or 25. But the point is, the real interesting thing here and the way to think about this is nobody knows how to define a pivot. Like we've gone risk on pretty clearly. The markets reacted very heavily to what he said. They took it as a big positive. So when you look at the definition of a pivot, I think you're a physicist, you know this better than anybody. Isn't it the point at which a mechanism turns or oscillates and a slowdown is a turn?
But they're not actually, I think to some degree you're right, but I think a lot of people are sort of speculating, right, that they're about to pivot, right? Rather than necessarily saying they have pivoted, I guess people are sort of speculating that the pivot is about to occur within the foreseeable future, right?
Well, because of the debt structure of 130% debt to GDP, I think I said on Twitter the other day, that is the last 75 basis point hike we will probably ever see in our lifetimes. Because again, the overall trend of the last 40 years is lower interest rates and higher debt. You can't jam another 75 basis point in. We will revert back down to about 2.5% sometime early next year or even before year end. So the pivoting is already happening. They can't do another 75 basis points as far as I'm concerned without destroying everything.
Do you think?
And they definitely can't do that before an election.
Do you think that that'll be the case regardless of what inflation prints next month or the next couple of months? Like, you think they'll stick below 75, even if inflation year over year comes in at like 10%?
Yeah, they don't care because they also have to inflate the way out of debt. That's the other angle to this. They know what they're doing. They're not dummies, but they talk a different talk track than what their end game is.
Right. Okay.
That's always been my opinion as well.
Well,
like the only way they can get out of debt is inflate their way out of it and continue to money print at the same time. It's just, for me, maybe I oversimplify it, but it's as clear as day, and it has been for a long time what their plan is.
Do you think, I mean, it sort of brings in the next question though, because I mean, I want to try to tie everything back to each other. So we talked about inflation, we talked about the Fed. And obviously, the Fed is going to keep their eye on unemployment. And I think one of the reasons that they're refusing to call what we're in right now a recession, even though we had 2 quarters of contraction in the United States, is because unemployment is still low. But arguably, unemployment is a lagging indicator anyways. And by the time unemployment peaks, the bottom is already well in, because it takes a while for all. I mean, markets are forward looking, right, as we know. But regardless of whether you agree it's a recession or not agree it's a recession, by some people's definitions, we are in a recession, right? And by sort of the old standard definition of seeing 2 quarters in a row, what is Bitcoin going to do in a recession? I've basically spent, since I've been in Bitcoin, I've spent so many years with people talking about, well, Bitcoin's never experienced a recession, right? Like, we've talked about this forever. And now that we're in one, by what people used to define as a recession, where do you see Bitcoin going? I mean, over the last couple of days, at least, it's been going up. Which, if that's the case, if that's a sign of things to come, then I guess the recession isn't such a bad thing for Bitcoin, but I think where do you see things going if we're in a recession, like another 12 months or something? How do you see Bitcoin performing during that time? James, I'll go to you first.
Well, to circle back to another key point you made was regarding unemployment. The unemployment numbers, like the CPI numbers, are all BS. Since March 2020, 3.5 million Americans left the workforce, and many others in many countries all around the world. So when you see, oh, we're at 3.7% unemployment, absolute BS statistic. There's a lot of people that just don't want to work or be subjected to crappy salaries. They find other ways to survive doing different things. So that's the first thing. Second of all, for the first time ever, I found myself agreeing with Nouriel Roubini. Some people call him Dr. Doom. And he says, if something about it, you're delusional if you think the coming recession will be short and shallow. And that's the $1 million question here is, are we going into a stagflationary global debt crisis, or will the government print us out of this recession? That will determine how short it will be. And if when they discover, everything is crashing down around us, let's take those 150 basis points back and let's print more money. The printing money is going to happen, as I mentioned, with those two bills of $1 trillion. That's just what's going. Now, the back to your question is, what happens? Now, there was a very interesting post from Bill Ackman. He's the bond king, probably a top 10 investor. And he was upset that JP is not doing enough. But he's talking his bag. He needs kind of higher interest rates for his bonds to kind of do well. And as we go risk on again, this is getting back to your fundamental question. I believe Bitcoin will do well. It is the hardest asset on earth. Therefore, it should be a perfect inflation hedge. But the last 18 months, it has proven it is not the case because it's tied to risk on assets. And there's a lot of money on the sidelines that needs to find a home. They can't go into the bond market. Who's going to take 2.5% yield in an 8% inflationary environment when the reality is like 10, 14%? It's ridiculous. So money needs to find a home. High growth companies do well in recessions. Certain risk assets do well in recessions too. And I believe Bitcoin is in that category. So I don't think it's the kiss of death. I think it's only a matter of time before people will sniff out that perfect inflation hedge, the perfect hard asset that is getting more and more adopted every single day across every metric, and it's massively scarce. That's been my thesis on Bitcoin from day one. So we just have to wait for the time. It's a waiting game before it does turn around.
Rob, do you share James' optimism on that? Do you think that do you think generally Bitcoin will do well during a recession? I mean, obviously, up until this point, you could argue that we've been in a recession since January, right? Like, it's just only been declared now. So far, up until this point, it hasn't done that well. But now that it's officially been declared a recession, like, where do you see Bitcoin going from here? I mean, it's still down, like 60%, 70, I don't know exactly, from the all-time high. It's still down.
65.3%.
Yeah, it's still down quite a bit. I mean, you think it can wiggle its way back up some over the course of however long the recession lasts, or are we basically just going to be stuck in traffic on Struggle Street for a while? I can't hear your volume.
Rob, you're muted.
Stuck in traffic on Struggle Street. That's pretty funny. So no, here's the thing. Like, Bitcoin can do okay, and it can inch up in a recession. But you gotta understand, I mean, where's this big chunk of money coming from? Is it all retail? It used to be, but now it's not. Now it's a lot of institutional investors. And the thing with institutional investors is they got to answer to their shareholders, and we saw that with Tesla. So look, I mean, James, it's a great thesis and it makes sense, and I share it with you. But I just don't think now is the right time. I think people in our bubble, we get it. We totally get it. But the people outside are like, it sounds good, but I don't trust it. And it's going to take some time. And I think what's going to happen is, as time goes on, there's a difference between Wall Street and the economy. There's a difference. How is the economy doing? Well, economy's doing, okay. And then to get in those numbers with unemployment, I've talked to many people in different industries, especially construction. They're like, we can't find anybody. We can't find people that can work, will work, or are actually up to the task to work. And even if those people are doing something else, it's still, the unemployment rate is still 3.6%. They're not going into the government agencies are going, give me my check. So there's something that that doesn't fit right in there. But if we want to talk about how Bitcoin will do well in a recession, probably won't. People will look at this and go, it's still a risk on asset. I don't really think it's going to do fantastic. It's not going to hit all-time highs in a recession, I don't think. I think people are going to be a little more conservative. But is that such a bad thing for us? I mean, that just gives me more time to dollar cost average. I mean, I could really, honestly, if the recession lasts for 12 to 18 months, which I think we could probably see,
Right.
What does that mean? That brings us into 2024 and leading in 2025. And that's what I've been playing the whole time anyhow, just to keep accumulating. So
Right.
people will want to say it. They talk a good game, but when it comes down to it and they're looking at their portfolio and going, holy smokes, I just lost 30% in 2 weeks. Then all of a sudden that psychology changes. And that's my thesis.
Yeah, I mean,
And
yeah, go ahead.
to double click into that as well, though, what people sometimes forget as they look back in history, but everything moves faster now. You know, we move into recessions faster and we move out of them faster. And by the time the markets sometimes realize or get confirmation there is a recession, that's when things start moving out from the market perspective. We've already seen that happen with the huge bounce in many risk on assets. We've already seen as well a large amount of people deploying. People have been sitting on cash for 3, 4, 5 months, have started to deploy because they can't not be on the train anymore right now. And one final thing that's important to note as well, I think there was Boston Consulting Group came out with a report a few days ago, and that is 0.3% of personal wealth is invested in cryptocurrencies, as opposed to 25% in stocks. So it's like the odds are stacked in Bitcoin's favor is kind of what I'm trying to say. And all I look at is numbers, could be wrong, but it seems like a good bet to me. That and really good risk on assets too.
No, you're right. It's a great bet, but the narrative I don't think is there yet for mass amount of people to get in there. They still see the rug pulls. They still see the scams. They still hear about Voyager and Celsius. Those people are like, you know what? I don't know what's going on over there, and this doesn't make any sense to me. We could move out of this, but that's going to take time. That's just my opinion.
That is true. A lot of trust has been lost. Good point.
Yeah, and I mean, if history is any indication, 2024, 2025 is the timeline anyways, you know, based on what we've seen in the past, right? And we didn't hit a new all-time high this cycle until what, like late 2020, I believe, was when Bitcoin went above its all-time
April 14th, 2021, and then November 17th, 2021. That's two double
Well, those were the
tops.
peaks. Those were the peaks, but I'm saying, when did it actually cross the prior all-time high at 20K? I think it was in late 2020, right?
2020. Yeah.
Yeah,
And I think that towards the end of 2020.
Yeah.
And I think the reason was because everybody heard about Tesla investing into Bitcoin, and everyone went crazy. And I was like, they'll sell. No,
Well,
they'll never sell. Institutions will never sell.
That happened in early 2021. I think Tesla announcing it, because I remember we went to like 42K or something. We came back down to like 29, and then it was sort of inching up. And then I remember waking up one morning and seeing the headline that Tesla had bought Bitcoin, and then it just rocketed it up into that distribution phase, you know, at like 60K or whatever. So the next question, obviously, so we need to talk about Ethereum. So Ethereum has been outperforming not just Bitcoin, but most everything recently, right? And for me, you know, as I've said before, right? I mean, like you basically count on Bitcoin and Ethereum to trend up with time. The altcoins kind of come and go. There are a few that I like. There's a lot I don't like. But in general, I'm you know, much more pro Bitcoin and Ethereum than most other things. Though I do hold a few altcoins. But I guess for me, it is a little surprising recently. Like, even though I think Ethereum will trend higher with time, it is somewhat surprising to see Ether outperform Bitcoin as much as it has over the last few weeks. I was actually looking back at 2018, and I saw actually a similar time where it did this. The Ethereum dominance spiked up to about 20%. Before cooling off for a little bit. Do you guys think that Ethereum will continue to outperform Bitcoin going into the merge, which is still, you know, several weeks away? Do you think it'll run out of gas before then, or do you think it'll keep going after that? And I want to be clear. I mean, I'm not talking about Ether USD. I'm talking about Ether Bitcoin, okay? Because like we know that if Bitcoin goes to like 30K, we know Ether USD will go up with it. Okay, so the question is where do you stand on Ether Bitcoin? Do you think it will continue to outperform? Do you think that momentum will carry it higher through the merge, or Is it already losing steam? Rob, any thoughts on that?
I think it's doing amazingly well, even though it's down almost 3% for today. But I mean, could this be a classic case of buy the rumor, sell the news? And what's amazing to me is that I personally thought that this merge would like never happen. And when they set a date, I'm like, nope, nope, nope. But this one looks like they're actually gonna go through with it, and it's actually gonna hit. And if that happens, I think we're gonna see some pretty good run up on the price. But here's the problem with the thing I just said is that I know it, you know it, James. Everybody knows that's watching. So I wonder if people are just going to front run it, just push the price up, and before that day comes, 2, 3, 4 days, it just drops the price because they get out. That's the question for me. So I think it could do well. I'm more excited, honestly, about Polygon and the things that they're doing. But yeah, Ethereum's doing pretty well. Let's see if they can actually hit the third part, the sharding, and really go to the ETH 2.0.
Yeah, well, I mean, I also know too a lot of. I mean, there's the ETH Bitcoin valuation. There's also alt Ether pairs, and a lot of alt Ether pairs are down not because the altcoins are down, but because Ether is up so much, and the altcoins, some of these altcoins just haven't kept up. Like I think like Cardano has been bleeding against Ethereum. I think Solana has been bleeding against Ethereum. I mean, I think a lot of altcoins have been bleeding against Ethereum over the last few weeks during this, fairly impressive rally. I think it's up 100% from the bottom. James, where do you see it going? I mean, I know you also prefer some of these other layer one solutions. Do you think Ethereum's going to continue to lead the charge, or do you think it'll pass the baton off?
Well, Ethereum is my second biggest crypto holding. Always has been. It was the second crypto I bought after Bitcoin, so I get an early. I do think I think Rob stole a bit of my thunder. I do very much think it's going to be a buy the rumor, sell the news. That's what typically happens before forks. We are up over, I think, 100% since the bottom. Coincidentally, it's amazing. Literally, right now, I'm looking at this other spreadsheet I have. The distance from the all-time high for Bitcoin and Ethereum is exactly 65.4%. So for them to be in line at this stage is kind of crazy. Everything's a little bit different around, but I still think people still believe ETH2, the merged proof of stake, is the silver bullet, but it's not. That being said, Ethereum could easily run up to $2,300, $2,400. If that is the case, we know exactly what Bitcoin's going to do too. That puts Bitcoin up around 30K. So we'll see. So when I look at Ethereum, and I grapple with this a lot because it has a lot of pros. It's got the ESG narrative. It's got deflationary system post proof of stake.
Yeah.
We heard that before with the IP 1559, which was supposed to make it deflationary, and it didn't. So we'll see where this goes. It's also the incumbent, but the cons as well. I think Vitalik himself said, even after the proof of stake merge, Ethereum will still be 55% complete. So it's like changing the wings on an airplane while it's in air. And other L1s are chomping away at the market share. So the other thing to look at, which is kind of interesting, is the way I kind of think about Ethereum, is I look at Matic and look at the Matic pair, Matic ETH, as you're kind of talking about. And Matic as well has been doing incredibly well. It's actually been outperforming Ethereum. So from the bottom.
Right.
So that's another interesting way to look. But I think, we're good till September 19th. And then, everybody will say, okay, where's the magic? Same old. And then maybe people will sell out.
It's not even that far away. It's only like 7 weeks, right?
Yeah, or maybe it'll go heavily deflationary. Some people believe the deflation could be minus 4% by the end of the year, which is staggering, but I don't see that happening.
It's pretty good.
Hey, go ahead.
No, sorry, I was going to say that, I just saw this, just came across the desk, is that the upgrade for Cardano, the Basel upgrade, I guess that got pushed back a couple more weeks. So I wonder how that's going to, what's weird is that came out this morning, but the price still
didn't
up.
respond.
Yeah, didn't respond. So maybe people like, oh, great, I can buy some more. I don't know.
Well, I mean, I think to some degree, when Bitcoin and Ethereum are moving higher, they can just sort of drag everything with it as well. Regardless of what's going on with individual product. You just have the market risk, right? What do you guys, speaking of Bitcoin, right? Like, what are your thoughts on it in terms of, in terms of a bottom? I mean, look, as we've said the entire year, right? I mean, we've been going back or since January, we've said it's silly to try to, you know, it's sort of like a difficult task, I would say, to call the bottom, because it's easy to think it's going to be the bottom every step of the way. Obviously, we're getting into levels that are a little bit more convincing. I mean, 17.5 is what, like 75% down from the all-time high. I believe the last bear market, it went down 84%. The one before that was 86, and the one before that was like 94. So do you think that, I guess, how confident are you? Obviously, no one really fully ever knows. I mean, like, you could always have some black swan event that changes everything. But how confident are you that 17.5 is the bottom? And if it's not the bottom, do you think it's reasonably close to whatever the bottom could be? Rob, do you have any?
I'm not that well. I'm kind of with you. I'm not confident that the 17.5 could be it, because like what we just talked about, with some different things that could come out, and who knows? Like, we know that we believe that the Three Arrows Capital contagion that was it, and we know exactly how many companies, but who knows? And who knows what can happen in the future? But yeah, like when you talk about 75% from peak to trough for this last one, I mean, Bitcoin usually goes down 85%, somewhere around there. So could we see a below 17.5, even a 15K? Sure. And it's one of those reasons why I don't just go, okay, I'm taking all my money and just putting it all right in there. I mean, I could, because in all honesty, what if it goes from 22 today, almost 23, and goes to 20, and then 17, I buy it all in 17, it goes down to 15 or 13. Would that be the most horrible thing? It really doesn't. I mean, the grand scheme of things, I'm not a trader, so I just look at things as, is this expensive or is this inexpensive? Right now, I think Bitcoin's pretty damn inexpensive. And I can just look at that and go, well, if I'm going to be around for 1, 3, 5 years, I should be okay. If I want to play around with it like I've been doing lately, like with the CPI numbers, I just waited, and then it worked out okay. And then with the Fed rate numbers that came out, I waited, and I was right on the recession part, but I wasn't right about the market dipping. Totally missed that one. So I just immediately bought, and then that's when it went up. I was hoping for it to go down, it didn't. So for me, I could see it go down to 17 again, because we never know. I mean, remember when we were all talking 4 or 5 months ago and we're laughing at below 20K? Well, here we are.
I mean, yeah, 20K was always certainly a possibility. I mean, I remember when it was at 40K, and we talked about, like it could easily go down to the 20s. I mean, even just going below the summer lows, you're already in the 20s,
Yeah, you're right.
But do you think, so would you say that, like, it sounds like what you're saying is, like, and I think I would agree with you, right? Like, the best idea is just to layer in, right? Like, not to worry too much about the exact price or the exact bottom, but is that more or less the idea?
Yeah. Well, it's the same thing we all talk about. I mean, it's the same reason we call the show DCA. We're going to layer in dollar cost average, and that's pretty much it. Don't invest more than you can afford to lose. Treat everything like a scam. Don't use a ton of leverage, and I think you'll be okay.
James, what do you think? I mean, I think that you're fairly optimistic about it. I mean, obviously, by our discussion today, it seems like you're fairly optimistic that risk assets are going to be doing well for quite a while. Do you think, if you do think 17.5K is around the bottom, right? It's either if it's the bottom or around the bottom, whatever. Do you think we'll revisit that area at any point or come close to it, or do you think it's just we're just sort of moving higher now?
Well, in just a little over a month, we're up 37%. So that's, sometimes people have been kind of waiting for the magical 12K that other people talk about all the time. And I think that is definitely a mistake. But every indicator to me screamed, yes, 17.5 was the bottom. I'm 85 to 90% certain of that. All the liquidity is flushed out. All of the on-chain indicators, love them or hate them, they do tell a good story. Short-term holders have been flushed out. It's all new. It's like a total reset. There is one little gray cloud left, and that is Mount Gox, what impact that will have over the coming months. But apart from that, it's risk on. Everything's going up. There are still a ton of folks out there waiting to deploy, and they've been waiting for those very, very low numbers that we may never get to. I think there is a chance if crap goes really sideways in the market, some type of gray swan, black swan, something nasty happens, or 140,000 Bitcoin get dumped on the market, we could hit 17.5 again. But I think what will happen is You got a lot of people with their fingers on the trigger. They're kicking themselves now with Bitcoin at 24K, up 37% off the bottom. They're saying, did I miss it? But they won't miss it the second time around if it does go down again. That's my thought. But I'm 75, 85% sure that 17.5 was the bottom of this cycle. And remember, it's not, people say, oh yeah, because it did it in history, it's going to repeat. No, this was a massive, massive set of exogenous circumstances and cascading liquidations that nobody knew was going to hit. That's what took us down to these levels.
All right, fair enough. Well, we've gone through a lot of questions. We have a few more minutes. If anyone has any questions in the chat, we'll try to get as many of those answered. Let me see. Someone says, what does it feel like to profit or have profit? It's kind of the general sentiment, I think, in bear markets is you kind of, when you layer in and it just keeps going down. Right now, obviously, it's back up a little bit, so we're feeling a little bit better about ourselves. But I imagine profit still weighs off, at least on the entire portfolio. Maybe the local, the shorter term trades are up. All right, let's see. What other questions do we have? If there's any questions, any serious questions, I should say.
While you're looking for one, I just want to correct Rob. The name DCA is a play on terms, but it actually was from Digital Crypto Answers. That was how they originally came about. Oh, yeah. Not necessarily DCA, because sometimes it works, sometimes it doesn't.
Yeah, it made sense.
All right. One thing I was looking at earlier is the whale number 3 is no longer a whale that we'll be seeing, I guess, anymore, because it looked like they transferred out all their Bitcoin the last I saw. Have you guys looked into that at all?
Yeah, I actually did a video on it. I think you may have been on vacation.
I was. I saw it, but I'm like, I'm not dealing with this right now.
Yeah, whale number 3 is now what I call the LQ whale. So it's just moved over, and some people believe that could be Coinbase. Or at least they moved, what they did was they moved all of the coins to an interim wallet, which I think is called the FZ wallet, which used to be the one that they played back and forth with wallet number 3 for a long time. Then they moved everything to FC and straight into the new LQ wallet. It was just boom, 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 boom. I don't know why they did it, but it all seems to be the same organization or the same partnership that's doing it. Yeah. That's my thesis, and I'm 95% sure I'm right on that one.
Someone's asking a question we already asked. Is that, do you think the Fed will hike another 75 basis points in September? But I think James is probably thinking either 25 or 50. And Rob, you're thinking either 50. Yeah, 50. I think that's the general. Yeah. It's the general consensus, I think, right now is 50. I think that's sort of the base case. I think the base case could change to 75 if inflation year over year keeps going up. Like if it goes up to 10% or something by September, I wouldn't be that surprised if they did another 75. But who knows?
Yeah. What people, just to reiterate on that one, what people forget is the debt. Every time they increase another 50, 25 basis points, 75 basis points, they reduce the GDP of the country by that amount. So if they want to come out of a recession, they cannot hike. It's just that simple. And this is what people, sometimes they take their eye off the ball, and that's the ball. And that's the key.
Paul has a question. Why does the United States always feel like their economic situation is a single factor that affects the price of the global crypto market?
America, that's why. Because we just believe, this is the truth. America believes that we're the center of the universe, and that's really what it comes down to. Even I have this narrow vision, and it takes me a while just to not be so myopic. So it's just one of those things where we think it is everything, and it's not. And then if we take a look at even like inflation in the UK, I was just talking about. I mean, there's inflation everywhere. There's problems everywhere, and we are a big global market. That is the truth. It's just that, unfortunately, or fortunately, however you want to say it, the global reserve currency still is the dollar, right? Mm-hmm. Unless something changed. So there is that big, enormous factor. Now that could change as time goes on, but right now that's what it is. And I hate to say it, but it is the truth.
Yeah, and Xi, Putin, and Modi have different plans for the dollar hegemony, and they'll do everything they can to dethrone the dollar.
I've been hearing that same thing, that same song and dance for years too, and I have yet to see it to come to fruition. The same thing with the Bitcoin ETF. Now, if one of those happens, I'll be happy to say, hey, I was wrong, but we'll see how. I mean, eventually, every empire falls, right? Just take a look. Just do a Google search of the fourth turning. I think America's in its heyday and slipping fast. So,
I mean, I think another reason too that, I mean, I've noticed over the last several years, like all of my, domestic or, United States like index funds have outperformed most of the international funds. But I think a lot of reasons for that is because money has just been so cheap in the United States as well. And that's where a lot of the growth has taken place. All right. Someone asked, was there a slowdown in VC money going into crypto over the last 3 months? I don't know the answer to that. James, do you know the answer to that?
Yeah, I think you need to look at the on-chain people that are buying. So there's been big accumulation, those with under 10 Bitcoin, like 0.1 to 10, and those with above 10,000 Bitcoin. So, but those with 10,000 Bitcoin plus over the last, say, I think it's 8 to 10 weeks, they've spent 82% of all the money going into Bitcoin has been spent by that cohort. So watch that group. They're the ones buying. And that could be like a family office, a rich family saying, okay, I'm going to just sock away 10,000 Bitcoin just for the hell of it. And there's just been a lot of stacking in that regard in that cohort. So, and also the people with a goal of having a whole coin. It's one thing I stressed a lot last year. That goal is very much alive and well. People had no shot of having one at 67K. But at 20K, yes. And we're seeing that reflected in the numbers too. And I know you have a good eye on that on-chain stuff as well, Ben. What do you think?
With regards to new VC
Who's
money?
buying over the last 2 months?
I think there is still VC money coming in. I mean, I know there is because I get approached all the time.
Sorry. Was that VC money?
Yeah.
I heard DCAing into.
No. VC money,
okay.
Like venture capital money. I mean, I think.
Oh, sorry. I answered the wrong question. Apologies for that.
I mean, I think some VC money is coming in for sure. Yeah, I mean, do you want to take the question now that?
There's been a dramatic slowdown in VC money coming to the space. It's fallen by over 70% over the last 2 quarters. So nothing like the crazy money coming in. But I think Andreessen Horowitz had a $3 or $4 billion fund, et cetera. But it is ground to a halt, like everything else. But it'll pick up again. And there are still some select projects raising money too. So the space is by no means dead. It just slowed down a lot.
Yeah, I personally speaking, I've been approached by a lot of people, trying to shill their projects and whatnot and raise money for it. So I know there people are still trying to raise money, and there is some money being raised, but yeah, it doesn't really feel like it's nearly as much as it was last year. Okay.
And I think projects are getting away from the VC money because they know just how damaging it can be. Like, I had Simon Yu from stormx on a couple of days ago, and he said we shunned all VCs because when we did it originally, it was a big problem moving forward. So we don't even approach VCs anymore.
So how do they get money if they're looking to raise money?
Well, they have. So how does stormx raise money?
Or anybody like it? If you want to build a project nowadays, I think the starting level is 200 to 300 million bucks to get off the ground. You build a proof of concept for 10, 20, 30 million dollars, but then to really get it going, you do need a lot of money, especially when you look at a lot of the program, like the blockchains right now. It's all about adoption and building, and that costs a truckload of money. You got your avalanches and et cetera. They all have 300 million in the kitty to fund that. So that's your murderer's row of competition. If you don't have 100 million, 200 million, 300 million to get started, you're not going to be able to fly.
So James, first you said there's VCs are not coming in. Now you're saying that they have to come in. Which one are you talking about?
If you want to start a new project, you need 200 to 300 million dollars to compete against the layer ones. I'm only talking about layer ones right now. That's what you need to be able to fund adoption and build out, which takes a lot of devs, which are few and far between and very expensive.
Yeah. Well, I think like when I was talking to Simon, the reason why they don't use VCs is because they've been around since 2014. So they used them in the beginning, didn't work out too well because of such demands. And then, of course, they had problems with dumping of tokens. And they moved forward, and now it's all retail based. So that's what I'm trying to get to.
Yeah, and there are, like anywhere else, there are shady VCs and there are good ones. So pick your VCs carefully.
Yeah.
Well, I mean, I will say that, I mean, the people that are still working hard now, I think they're just building, they're trying to build out projects for, you know, for whenever the next bull run is. I mean, even, I mean, as we were talking about earlier, like, you know, is the bottom in, is it not? Even if it is, even if it's not, we're still likely all heading towards the same place. Hopefully a bull market, you know, out in sometime around the next halving or so, if history is any indication, which hopefully the Fed has pivoted by that point. I imagine they will have certainly pivoted by early 2024. Another good question just came in. Let me actually, I think it scrolled up a little bit. Thoughts on the strong labor market? I think James talked about this a little bit earlier. They said, do you think it'll hold till inflation is under control? So, I mean, I guess you could argue, as James was saying, is the number sort of made up anyways. But I mean, with that made up number, James, what do you see it doing until inflation's under control?
So there's a couple of things. One, hiring freeze is the new RIF. If everybody knows of RIF, reduction in force, what used to happen back in the day. So there's always natural attrition within companies, but what they do is they instill hiring freezes because of natural attrition, like 5 to 10% of the workforce leave. The fittest rats jump first, always. That's the first thing that's happening. Second, we are already in the midst of seeing a huge uptick in new unemployment claims. And just pick up a newspaper, look at all the companies that are laying off 10%, 20% across the board because they are suffering. And that covers both crypto and traditional markets, financial services, you name it. The mortgage companies, building companies, all across the board, hiring has stopped. Yes, it's still very hard to find good qualified people, but for the vast majority, the unemployment rate is going to increase. And again, it's such a silly number. Like way back when 30 years ago, there was an unheard of number called 4%. And that was considered max unemployment. Like literally, you cannot have unemployment lower than 4% because 4% of people just don't want to work anyway. That was the math. And now we got 3.7%, which is just stupid. You know, again, the numbers are fake. It's all BS. Just my take.
Fair enough.
I get off my soapbox now.
Someone says DCA stands for don't care anymore. I think, why don't we go ahead and wrap it up there? We've answered a lot of questions. I do appreciate everyone tuning in. If you're not subscribed, make sure you go subscribe to James and Rob. You will find a link to their channels down in the description below. And next week, where will it be? Will it be Rob's or James' channel?
I think James, because mine was last week.
Yeah.
Okay, so next week we'll be on James' channel, so make sure you subscribe there. Next Friday, that is where we will be. All right, guys, thank you for tuning in.
And thank you to the 3,500 people who are watching. I hope you got something from this. And thank you, gents, as well.